JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 22nd of April 2021. So yep, welcome everyone. Welcome to this Thursday's afternoon session where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, the first one I want to pick up here is the German index DAX, and we are getting closer to this 15,312 barrier, the one that I mentioned yesterday and this morning as well. And basically what I said, that if we climb above that area and stay above it, if the daily candle stays above this area, then yes, higher levels could be met. We could then maybe move back towards the current all-time high near the 15,502 territory. If that doesn't happen, if the daily candle doesn't stay above the 15,312 territory, then we'll take a bit of a neutral stand, because for us to consider the downside now, well, preferably a drop below, let me just adjust a few levels here, a drop below the 15,072 territory would be needed. At the same time, we would already get a break of this upside line and a drop below the 21-day EMA, and more sellers could see this as a good opportunity to join in. So yep, for now, long story short, we are carefully monitoring this barrier right here. We're neither bullish nor bearish. We're carefully monitoring this barrier here. If it provides resistance, then yep, there is a possibility maybe to see decline again. However, if it breaks and we see the daily candle remaining above it, then higher levels could be met. S&P 500. Now, looking at this picture here, yesterday we saw the a nice recovery here from this level, and this is what I talked about previously when I was covering S&P 500. That if, in order to go for let's say a larger correction to the downside, a drop below this 4,121 territory would be needed, and yep, on Tuesday we got a violation, a slight little violation below it, but of this line, but yeah, the daily candle still remained above it. Yesterday we came close to testing it, but didn't really test it, and we instead reversed back up and climbed back above this 4,152 territory. So now there's a good chance we could see this one continuing pushing north. However, let's quickly take a look at the cash index, where it's currently sitting at. So let me just double check that with you guys. So yeah, we're currently sitting at around 4,172 zones, so not far from where it closed yesterday. We're still not near the all-time high, which is around the 4,191, but in a way, kind of with the same pace, we might even test it today or even overshoot it, and this way kind of we would confirm a forthcoming higher high, and the index would be placed into the uncharted territory here, and well, the sky's the limit in that case. Then of course we have those levels like the 4,200, 300, and those are the ones we could start watching. But again, for now, it is how it is. We're just gonna go step by step on this one for now. Or should I say, as long as the price continues to trade above the 4,152 territory, we will continue aiming higher, and our next target is the all-time high near the 4,191 zone. Now, jumping into DXY. So DXY is still the same as it was this morning. And this morning, basically what I mentioned this morning, that in order to go for further declines, we need to see that drop below the 91.05 territory. We did get that drop initially, but as you can see, the bulls pushed the index back above this hurdle. So that's why for now, we'll just be very careful. Yes, although there is a chance for this one to drift further south. However, that daily candle staying below this hurdle would be needed in order to go for lower levels. For the upside, what I would prefer here is to wait for a break of this downside line and then take it from there. So, but at the moment, we're not neither there or there, so we're just observing the price action. Silver. A bit of a decline today, however, still is trading above that 26.30 zone. So in a way, there is still a chance for the bulls to step in here. However, if you want to be a little bit more on the safe side, on the cautious side, you could wait for a push above the 26.63 territory, which recently acted as a very nice area of resistance, and that's the high of the 18th of March. Or, in other words, I think it's the that's not the highest point of March. The highest point of March is the 27.07 level. So yeah, that's the one that we're going to be keeping an eye on as well if we get a pop above the 26.63. For the downside, I need to see a break of this upside line and a drop below the 25.46 territory, somewhere around here. At the same time, we would have the price placed below below the 21-day and the 100-day EMAs, and then more sellers could join in. Brent Oil. So Brent Oil is drifting, or should I say was drifting lower. Initially was trading below that 21-day EMA. However, as you can see, the bulls managed to push and lift the price back above this 21-day EMA. However, they're struggling with this 65.50 territory. Now, let's see if the index can overcome it and stay today above it. If it can, then maybe we could see a move back towards this the current highest point of April, near the 68.04 level. And then we would of course take it from there, because if it goes further, then yes, higher levels could be met, and these higher levels could be tested. But again, I'll pick up on this one if we do see the daily candle staying above this area, above the 65.50. If it doesn't, if it's instead it drops back down and falls back below the 21-day EMA, now, well, I mean, this might lead to a bit of a larger correction here to the downside, guys, so keep your eyes on that one. Ethereum. Okay, so new all-time high, managed to overcome the previous one, and this is what I talked about this morning. This is what I was covering this one this morning, and basically we were still hanging around somewhere around here. What I said, that my next target is the 2,550 territory, a break of which could happen, but I would take it from there if that break would happen. And as we can see, the break happened, and now the big question here is, can the daily candle stay above this area? If it somehow fails to do that, then maybe a bit of a corrective move back down here could be possible. However, but if the daily candle manages to remain above this hurdle, above this 2,550 territory, then of course all eyes are going to be on tomorrow's trading, because maybe we'll get that continuation move further north. But if we won't, maybe then we could see a drop back below it. However, either way, guys, for now everything's looking quite positive here still, especially if the rate will continue floating above this 2,550 territory. If it does that, then yes, I'll continue aiming higher. AUDNZD. So haven't looked at this one for quite a while, but yeah, I mean, we need to adjust a few areas here. So one thing for sure, that last time when I looked at this, when I was talking about this highlighted area here, the 1.0805, and what I needed here is to get a nice good break here below this level in order to aim for slightly lower areas. My next target then would have been this 1.0743, which we managed to test perfectly here, as you can see, and now we're getting a bit of a rebound. So at the moment, the way we're going to look at this, first of all, let me just remove this highlighted territory. I'll I'll reuse it. But one thing for sure is to keep an eye on this downside line right here, and that's taken from the high of the 29th of March. Now, what else could be seen here? And let me just quickly grab another line, and potentially, we could maybe see this one, well, not really like this, to be honest, but more of a like this. So we could be seeing maybe a possible falling wedge pattern here. So if that's the case, of course, according to all the TA rules, these patterns tend to break to the upside. But until we get a violation of the upper side of the formation, we cannot really get comfortable with that idea. Now, in terms of the upside here, what we could keep an eye on here is this 1.0793 territory, which, as you can see, today is acting as a good area of resistance, as it previously acted as a good area of support here on the 15th of April. Now, we'll keep an eye on this. We'll keep on monitoring how this is going to be moving, but in a way, there is a chance for something like this happening here, guys, where we could see maybe another push higher a little bit here. If it struggles to overcome this whole territory here, then another slide could be possible. So something like this, keep that in mind. If you're not really comfortable with that idea, then, well, what you could do here is just stay focused on this low, the current lowest point of this week, near the 1.0743, and a nice good drop below it, yes, could open the door towards further declines here, maybe even towards this 200-day EMA, and maybe we're not really even gonna get a falling wedge here. Instead, maybe we'll have a nice little channel here. But again, for now, it's just going from what I have here on the charts. Maybe it could end up being a falling channel, who knows. But for now, at this point in time, it's not a falling channel. Instead, it looks like more of a falling wedge here, which, according to all the TA rules, tends to be more of a bullish indication. However, a break of the violation of the upper side of it would be needed first. USDJPY, we're very quickly on this. So I do apologize for the amount of lines here, but basically I'm gonna remove all of them just to have a fresh new look. However, but just before I do that, I wanted to say that first of all, the idea here it didn't really work out of seeing maybe a possible head and shoulders pattern here. But as I've mentioned before, that idea was still the secondary idea. The main idea was more towards the downside, towards this upside support line, which kind of worked out. So or should I say kind of, because we didn't really get that test, but we came very close to testing this upside line, and now we're seeing a bit of a reversal here. So what we're going to do now with the USDJPY, first of all, we'll continue monitoring this upside line, and we'll keep an eye on this 108.34 level right here, which previously acted as a good area of support. Now it could be looked at as resistance. If that gets broken, then yes, higher levels could be met. However, keep your eyes on this little short-term downside line here, and that's taken from the high of the 5th of April. So in order to go for the upside, we need to see a break of that downside line, and then we could take it from there, guys. For the downside, well, for the downside, I would prefer to wait not only for a break of this upside line, but also a drop below this hurdle right here. Let me just highlight this very quickly. So this is the high. This is the high of the 20th of July of 2020. So a nice good drop below it may open the door towards the 100-day EMA here, shown as the green line. Initially, that level is that EMA is near the 107.05 level, and then we would take it from there. Maybe it could drift further south towards the 200-day EMA, but I'll go slowly on this one. And for now, I'm gonna just aim for the 107.05 territory. Aim for this 100-day EMA. Only if we get a break of below this 107.55 territory right here. But if we get a break of this little short-term downside line and then a push up of the 108.34, this is where I'm going to start maybe considering a bit of a move higher. GBPUSD. So this one lit. Well, first of all, also before I continue with removing the lines here, now previously this week I said to you guys that maybe, just maybe, we could see a nice a hold up here near this downside line. But if that doesn't happen and instead the pair starts pushing above this upside line, we could maybe consider the an up move here, a further up move. However, I would prefer to wait for that push above the 1.8072. This is exactly what I was talking about, and look at this. I mean, this is what I've mentioned in, like I said, in the beginning of this week, guys, when I was covering GBP Aussie, and we didn't get that push above the 200-day EMA, or should I say, we didn't have the daily candle staying above the 200-day EMA. We didn't really get that push above the 1.8072. So yeah, I mean, for now, what we can say here is we're gonna get back to the drawing board here, and first of all, instead of drawing, we'll remove these upside lines and upside and downside lines, and instead what we're going to focus now here on is this little pattern, potential pattern, which could be seen as a maybe a possible inverted head and shoulders pattern. However, again, we need to be very careful with that, because we can only kind of assume these patterns if once they're kind of, let's say, completed. So if by any chance the pair starts reversing somewhere from this little area here, just let me, from this little inside swing high of the we marked near the 1.79 territory, near the inside swing high of the 16th of April here. If we get a hold up somewhere around here and then see a reversal back to the upside here, all eyes are going to be on this highlighted barrier and highlighted area in 1.8072, which could be considered as a potential neckline, and then yes, if we get a breakthrough that, then higher levels could be met. EURUSD. So this is what I mentioned as well this week when I was covering EURUSD, and yeah, basically so far so good. Although we had a bit of a decline here, we saw a false breakout here on Tuesday, but yesterday when I was covering this one, I said that we're not abandoning the upside scenario yet, because as long as we remain above this upside line taken from the low of the 18th of January. Now, as you can see here, we're now pushing back above the 21-day EMA, we're already back above the 21-day EMA, and we're pushing closer to this 130.67 territory. If we get that break, and if we get that daily candle staying above this hurdle, then yes, higher levels could be met. For the downside, I need to see a drop below the 129.64 territory in order to consider some lower areas. And finally, EURUSD. Well, everything's according to the plan here. So we're pushing further north. Everything's okay. So this is what I kept on talking throughout this whole week. So now, I mean, we're just basically monitoring the situation here and hoping to get a test of this 1.2113 territory, which is the highest point of March, which is also near this downside line taken from the high of the 6th of January, and then we would take it from there. For the downside, I need to see a break of this upside line and a drop below the 1.19 territory, 1.1990 territory right here. So basically, that's the kind of the same game plan as I've mentioned. Or kept mentioning for now till now. So basically, for now, like I said, we're just going with that. So okay, guys. So I hope you found it useful. Thank you very much for your views, for your likes, guys. I really appreciate that. So thank you very much. I hope you found it useful. If you want to catch my video tomorrow morning, as always, my Trader's Espresso. That's 6 o'clock GMT time. For now, have a wonderful evening. Stay safe. Have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.